Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're discussing the high and low of the day, using the Asian range to determine the high and the low of the day, and then looking at our timing window, and then understanding where we're at in relation to the weekly template and the high and low of the day. So I received quite a few questions and emails over and over again about consolidations. How do you know when the high is locked in? How do you know when the low of the day is locked in? Where do you get in? All those sorts of things. Today we're going to review just quickly, again, some simple concepts, but we'll look at how the high and the low, the Asian range, can help you determine the high and the low of the day, and then understanding the type of setups. So not trying to trade every move. Look, a lot of mistakes that I've made over and over again have come from trying to trade every move in the market. We'll look at some great examples of when you allow the market to set up, how those trades can come to you, understanding the timings and the high and the low of the day. The 3-hour window is something that I review over and over again. Mainly the London and New York time windows, the 2 to 5 a.m. and 8 to 11 a.m. New York Eastern Standard Time, and specifically the equity market opening times, 3 a.m. New York for London and 9:30 a.m. New York time, Eastern Standard Time. Specifically looking for high of the day, low of the day opportunities. And as we're at the beginning of a new month, we can have some high of the month, high of the week, low of the month, low of the week, which we've seen this week already on gold, oil, NASDAQ, heading towards lows of the month. And then I talked about double zeros and 50 levels. Those will tend to be the major numbers that the markets will turn around on. Now they can penetrate through those levels, locking in a level with a peak formation. But again, most importantly, we want to work from the high and low, or I would like to work from the high and the low, because I'm looking for markets that are locking in a low or locking in a high, trapping volume up high, and moving quickly or consistently in one direction with not a lot of pullback, which means less or little stress for the trade. It's over quickly. And these are trade setups that can be scaled up in size. You can control your risk. You're obviously selling high or buying low, ideally where the risk is the tightest. So without looking at anything other than just the timing windows and the high and the low, looking at the Asian range, we can pick any day randomly. It doesn't matter. I'm just looking at the euro. Let's pick Monday, for example, the 28th of February. We'll walk through this process. We'll look at some different pairs. Friday, Monday, Asia puts in a high and it puts in a low. Works itself down into a low in 3 pushes at the end of the 3-hour window and goes into consolidation at the low of the Asian session with 3 pushes. So this pin often will signify where an extreme will possibly end, and we'll look at an example again on gold last night. But then it works down in 3 pushes and then reverses in the gap time. Now, if we come to the market, or if I come to the market and I'm over here in this timing window and I see this, again, the opportunity perhaps for this trade doesn't necessarily mean, if I'm working strictly from the high and the low of the day and I mark off my low and the market auctions upwards at the beginning of Europe, I'm either going to look for something at the high or it needs to come back down to the low. And in this particular case, this market layered on top of the previous day's low before going vertical and then creeping back into the beginning of the U.S. session. Now, we don't have numbers or anything on this chart, but this is an example of where we broke through a lower high. So again, the market goes into consolidation. One particular trader emailed me and said, well, how do you define the consolidation? Well, the first place is the high and the low. That's the consolidation. Then I'm looking for the master pattern setup. Have they already pulled back and broken a low? Again, triggered breakout traders. Broken the high, triggered breakout traders, pulled back, but now we see the breakout trigger on the bottom, breakout trigger on the top, and then the pin hammer when it's on the inside. So just to, in simplicity's sake, if I'm only working above this box or above that line, or below this line, and the market has come down and worked itself into a low, and then also put in a micro W down at the bottom. I'll just blow this up. As I've mentioned before, if I was to enter into this trade, so again, there's our little micro W formation at the low of the day. If I was to enter into this trade, I would have to trade in the direction of the move that's come from locking in the low of the day. This comes into our timing window with a 1, 2, 3 down. That's 45 minutes down into the open. You'll notice it's layered on top of that lower high for an explosive move up. So the process is the same. You're not missing out on anything. London, again, we put in the high of the day for London. And for the London session, now we would mark off the low. Now in this particular case, in the U.S. session, the market auctions down and moves up quickly from the low, locking in a low of the day. Now, traders, again, this is an example of where they perceive possibly that they've missed the trade, or they may take that as a W back to the high of the day. When we get back to the high of the day, there is a trade opportunity. Again, I'm on the 15-minute chart, but if we were on the smaller time frames, at the high and the low, there may have been an opportunity at the high of the day. We can take a look at this chart with the numbers now, and we see that the low of the Asian session was locked in underneath of 50. They tested back to the previous day's low before going vertical up to just below the double zeros, pulling back down into the quarter level in the end of the the London window, forming our 3-push pattern and a W reversal for a move through the high of the day to the quarter level, and then auctioning back down and locking in the zeros. So again, if we were on the shorter time frame, we'd get a peak formation with a trade underneath of double zeros back towards the high of the day. What I'm trying to emphasize today, though, is the high and the low heading into the new London window. Now again, with the euro, obviously the Europe-London window will probably be a main focus of opportunity for the euro. It probably is traded more heavily in Europe and London than it is in Asia, and often in the U.S. session. So again, an example of studying the consolidations. The market moves down, goes into consolidation at the low of the day. We draw our consolidation down inside of the consolidation. This is what Peter Brandt calls a pattern within the pattern. So the market moves back to the high of the day. Perceive that you've missed the move, but we've gone to the high of the day now, into the London window for the sell high opportunity back down through the low of the day. And again, now that this market's broken down, we draw our high and low. The same process applies into the U.S. window. We have numbers, we have a broken down market. We can get a market breaking down and pulling back and continuing the move down. Specifically talking about Asia, though, how Asia can define our high and low. So often there may be a move early in the session, but from zero, from the rollover until the very last candle before the Europe-London window, so basically 1:59 a.m. New York Eastern Standard Time, that to me is the high and the low of the Asian range. If this market is moving prior to that, or as we see in this particular case, it's already moving, you can see an example again where we have our consolidation, a higher low and a lower high in the Asian window before it breaks down prior to the Europe window. So this is a market that's in consolidation. It's worked up, formed a pattern within a pattern. It makes a new low, pulls back, makes a new low, pulls back. So we have a market that's broken down. Once this market breaks out of that consolidation and pulls back, again, now we have our reference point for a low or a high. So there, again, traders can take this trade off the low of the day on a smaller time frame. But again, timing-wise, understand that as the market enters into that London hour, the 3 a.m. to 4 a.m. market, if we're already outside of consolidation at the high or the low, that may be the extreme. And in this particular case, the market came back down in the U.S. session, as we talked about before, for an explosive move up. Again, just emphasizing the Asian high and low. The Asian high and low. That can give us a lot of information. Then we incorporate our timings, major round numbers, the pattern of the trend, day 1, day 2, day 3, and that helps us put it all together. A great example on gold, a couple traders emailed me, and they hit a few large moves yesterday. And so pointing out, Asia had a 200 pip range. And so traders come to the screen and they're like, oh, if I'd only been at the screen, I could have hit that trade. We work on the outside. So we draw our high and our low. The Asian session ends. The Asian session ends just after this low. This is our low of the day. This is our high of the day. The market pulls back and then auctions down 1, 2, 3 into the low right at the beginning of the Europe window. And so, again, we see an example of a market that's created order flow, lower highs, and auctioned down into the low for an explosive move up. Now, if you were waiting for this market to come to the low and you did not take this trade, there is nothing wrong with that, because the market came up in 3 pushes and hit the high of the day and gave you the opportunity to sell at the end of the 12 candle window at the high of the day for a large move back down. And this move came down and got where the breakout gap was. So again, I mentioned about traders who would have been long in the earlier part of the day. There's a gap between the breakout of the previous Friday's high and that space at the low of the day. But you'll also notice when it comes down through that previous day's high, it now acts as support right at the beginning of the New York equity market. This bullpen hammer is the close right at the open of the U.S. session, which begins our march back upwards on traders that are short at the beginning of the U.S. session on the bear pin hammer. So you don't get something right at the low of the day, right at the extreme. We got to sell high right at the high of the day. We got to buy low right at the beginning of the New York equity markets at the very low of the day. And even on the 15-minute chart, this market closed at 52.54 with the spread, and back to the high of the U.S. Open at the beginning of that session was 878. So that's a market that gave over 100 pips from the New York Open back to the high of the U.S. session, as well as traders who were not only short from the high of the day, but who shorted the open of that U.S. 12 candle window for the move down to fill the gap. It doesn't matter which pair I'm looking at, I'm still going to just draw my high and my low. Take everything off your charts if you're struggling with this concept. What this is designed to do for me is to keep me out of the inside. So this is inside, this is outside, and you'll guess which time this candle is. It's the second candle of the Europe 12 candle window. We're not even looking at numbers, but that candle went up to 22. So, obviously right underneath the quarter level. But there's our sell at the beginning of the Europe session. We get down underneath. The market puts in a low in the gap time as we head into the end of the gap time and comes back up into the shorts right at the beginning of the US 12 candle window. So we've put a high in place. We've hit that. We've sold down to the low of the day. They've locked the low in 3 pushes and gone into consolidation. They've given us a micro W for the vertical move up, and it works the high in 3 pushes into the U.S. equity market open for the sell back down to the low of the day and the creeping trend into the close. Now this is a brilliant opportunity. And the NASDAQ, again, if you focus just on the equity market open, high and low of the day, this market can give you some fantastic moves. I primarily try to stay away from the NASDAQ unless we are at the very high or low of the day at the London Open or the New York Session Open, specifically at 9:30 New York Eastern Standard Time. And so we can go back. It doesn't matter, again, what day. We're going to draw our high and our low. For the Asian range, we get a sell high opportunity but this is in the gap time. So again, we may not have been at the screen when that opportunity presented. The market traded down through the low of the day into the previous day's low and went into consolidation with a pin hammer right at the open of the Europe 12 candle window, the second candle in. So again, you can see clearly on the 15-minute chart, there's our master pattern. We trigger breakouts, hit stops, and then trend the market. Pin hammer, 1-bar stop, and literally it can be that simple. These are the ideal trade setups. We go to the next day, we draw our high, and again you'll notice that the pin hammer that starts the move down is where I'm defining my high, because I have a thesis. They're going to work the low of the day first and then go vertical into the high of the day. Now that may not be the trade. When we get up to the New York Open, right at the end of the bear candle, we get our explosive move back down. And this is a great example of a geometrical structure. They break the high, they go vertical. We got our W formation at the beginning of the 12 candle window. But if you're only working from the outsides, right at the beginning of the New York equity market, we have our inside bar and a sell high setup. This was a sell high on the 1-minute chart at numbers. Again, we're not even putting the numbers on here. And this is the thesis. We're at the high of the week, the high of the day, the high of the session for the big move down. We go into our next day. The process is the same. We have a peak formation high. And this is a great example for people to understand. So this little pattern, 3 pushes into a peak formation, will show an example of that. This shows up everywhere on the 3rd push on the last level, and this is what often will generate order flow for an explosive move. But we lock in a peak formation in Asia. We put in a low at the end in the Asian window. This market breaks through its high, through double zeros, and gives us a bear pin hammer at the high of the day inside of the peak formation. So this doesn't have to take out the high. And you'll notice this little break in structure from the inside engulfment. This whole thing becomes a high of the day level. We stop hunt back into it for a vertical move down. They trade back up into the peak formation, break structure lower, pin up into it at the beginning of the U.S. session, and drop back down. And this pin hammer up is the candle that opens at the open of the New York session. So we have our pin high for our sell. And again, traders might want to be, on this particular situation, you get a bear pin high. You're either going to be looking to sell a pop-up or a bull candle, or pop-ups on the smaller time frames at numbers inside of that peak formation for the move back down to the low of the day. But yesterday was a brilliant trade. The session ending on a sell high at the end of the U.S. window. We put in a low of the day. We draw our low. So again, come back to ask myself, beginning of the Europe window, do I have anything down low? No. But I get a W inside if traders were recognizing that this was obviously going to at some point possibly retest the gap. We had 3 pushes into a low. We had our first bear pin hammer at the beginning of the 12 candle window. Then we had that little pattern, 1 push, 2 pushes, 3 pushes down, engulfment pin hammer right at the end of the 12 candle window for the explosive move back up and into the lower peak formation. This is right at the beginning of the New York equity session. The engulfment candle is the open of the New York equity markets. This went up to 25 pips above the last candle in the before the market opened. Again, which you can expect. So we have our 3 levels of rise. They've gone up and hit stops. We're opening at the very high at the New York equity session. It was a 1, 2, 3 and an engulfment on the 1 minute. They retested pullback and sold off from 50 down for a large move. So coming back to high of the day, low of the day, well, obviously this high is inside. Traders may have been shorting this, but they shorted it and it wasn't going anywhere. Traders who were switched on recognized we were working down into the low of the day. Working down into the low of the day. They locked in the low, and we worked back down into it for an explosive move up. Traders who were looking specifically just at the open of New York saw the sell high opportunity, even on the 15-minute, again, no problems either or. Just obviously your risk is increased if you're using a 15-minute stop versus a 1-minute stop, and so your position sizing may not be quite the same. But an example again of using the Asian consolidation to help you recognize the bias in the market for either a buy low at Europe London, a sell high, or an Asia London setup for a New York session trade, offering us a larger asymmetrical risk reward. This type of trade setup, high of the day, large box, a measured move potential, is where traders can obviously make significant return on an individual trade setup, as opposed to, risking 10 for 10, risking 20 for 20. You're risking 20 to 25 for 250. And those are the sort of setups that I'm looking for. So let the market set up. Use your Asia consolidation to identify the range. Now, Asia can give trade setups at the beginning of the day, and often they will be great trades. If you recognized again that order flow pattern right into the beginning of the second hour, and you'll often see this on gold, the second hour will often give us some good opportunities. This is major round numbers, 2,000 on gold. And so it was a creeping trend. So we have our pump and dump pattern right into the end of the U.S. session close. So remember, somebody's in the money, they pump it up, and the pin that shows up, I want to draw my pin across. We're at major round numbers. You can project it backwards and see if they've already locked in that high. This level's sold off twice already. It may give me a third sell-off. We have order flow that can become trap volume on a fast vertical move. We have a pattern within a pattern at the high of the day. This is the second candle of the second hour, right at major round numbers on the 1-minute chart. This was a little M formation and a nice vertical move before the Asian window even begins. But again, the process is the same. I redraw my highs and my lows. This price action that's currently trading is inside of the high and the low, so I'll either get a sell high opportunity retesting the low for a low of the day trade, or we'll work back up and have a sell high inside maybe and roll over later for a U.S. session trade. Time will tell, but again, I'm working on the outsides of the high and the low, and I'll let the market set up and give me the opportunity when it presents. So hopefully that made sense. Again, thanks for a ton of great questions and emails. Hopefully that clarified some things. Keep it simple. Take everything off your charts if you're not sure. Wait for them to get to the high and the low. Yesterday was a monster on gold. That's as good as it gets. Same with the NASDAQ. If you're patient and you just wait, let the market set up. There's all kinds of movement and you think you've missed stuff, and there they go right back to the high, bang, for a big move down. Have a great session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.